If you're holding XRP right now, the next 60 seconds could decide whether you ride the biggest wealth wave of your lifetime or watch it crash right over you. Listen carefully. Something massive is forming beneath the surface of the crypto market, and every signal points straight at XRP holders. Prices are quiet, headlines are calm, but behind closed doors, institutions, regulators, and whales are moving in ways most retail holders have never seen before. This isn't another random pump. This is the beginning of a tsunami, and it's heading directly for you. Right now, XRP sits in a dangerous calm. After years of legal warfare, regulatory fog, and suppressed price action, the token has been stuck in a narrow range while Bitcoin and Ethereum have had their moments. Many holders feel exhausted, some have already sold, others are questioning if they backed the wrong horse. But here's what they don't see. The very forces that once crushed XRP are now aligning in its favor. Court rulings that once felt like death sentences have quietly opened doors. Banks that once avoided Ripple like poison are now running pilots. And a global financial system desperate for faster, cheaper settlement is staring directly at the one asset built exactly for that purpose. This isn't hope, this is alignment, yet the most dangerous part? Most XRP holders have no idea how close we are to the breaking point. They're checking price charts, reading the same recycled news, and missing the quiet accumulation happening at levels never seen before. While they wait for a 20% move, the smart money is positioning for something much larger. Something that could push XRP into territory that sounds impossible today. $901? Yes, you read that right. $901 per token. It sounds like pure fantasy to most people, but a small group of analysts, on-chain experts, and former Ripple insiders have been mapping out the exact conditions that could make it real. Not tomorrow. Not next month, but in the window that's now opening. Before I go deeper, understand this. Tsunamis don't start with a giant wave. They start with a sudden shift deep underwater. Most people on the shore feel nothing until it's too late. That shift is already happening. In the last few months, we've seen unusual wallet movements, sudden spikes in development activity on the XRP ledger, and whispers from inside traditional finance that the old rules no longer apply. The SEC case that once paralyzed Ripple has transformed into something else entirely. What looked like a defeat is now revealing itself as the necessary fire that forged XRP into something regulators can no longer ignore. And here's the part that should keep you up at night. While you've been waiting, the supply dynamics have been changing. Billions of XRP remain locked in escrow, but the unlock schedule combined with burning mechanisms and real-world usage is creating a tightening no one is talking about publicly. Demand is preparing to explode while effective supply gets squeezed. That combination has destroyed bears in every previous cycle. But this time the stakes are higher, because XRP isn't just another altcoin fighting for attention. It was designed from day one to solve a trillion-dollar problem in cross-border payments. And that problem is getting worse, not better. Inflation, de-dollarization talks, BRICS movements, and failing legacy systems are all creating the perfect storm. You're not just holding a token, you're holding the potential settlement rail for the next era of global finance. Still, not everyone will make it through this wave. Some will sell too early out of fear. Others will hold too long out of greed. And many will simply get distracted by the next shiny narrative while the real move happens in silence. The tsunami doesn't care about your emotions. It only respects preparation. And right now, the pressure is building faster than almost anyone realizes. What exactly is fueling this buildup? Why are certain wallets accumulating at these levels? And what single event could finally unleash the $901 scenario that sounds crazy until you see the full picture? That's where this story gets dangerous. What looks like years of sideways torture for XRP holders was never random market noise. It was a deliberate, calculated suppression that began the moment Ripple dared to challenge the trillion-dollar SWIFT monopoly. From 2017 onward, every time XRP showed the slightest sign of life, coordinated selling pressure, regulatory headlines, and institutional FUD would slam it right back down. Most people called it bad luck. A smaller group saw it for exactly what it was, the old guard protecting their turf. Go back to December 2020. The SEC lawsuit landed like a bomb. Overnight, XRP lost 70% of its value and got delisted from every major US exchange. Billions in market cap vanished in hours. Retail holders panicked and sold at the bottom while insiders and smart money quietly accumulated. That single event created the perfect cover for the largest stealth accumulation in crypto history. But the real story isn't the lawsuit itself. It's what happened after the dust settled. In July 2023, the court delivered the first major blow to the SEC. XRP itself is not a security when sold on exchanges. The ruling sent shockwaves through legal circles, yet the price barely moved. Why? Because the full resolution was still years away, and the market knew it. That delay gave institutions the longest, cheapest buying window they could ever ask for. Fast forward to 2025. The final settlement came through quieter than expected. No massive fine. No admission of guilt. Just a clean path forward with regulatory clarity most altcoins still dream about. Suddenly, banks that once ran from Ripple were signing pilot agreements. Payment firms in Asia and Europe began integrating XRP ledger rails. And the on-chain data started showing something no one wanted to say out loud. Whales were loading up. Not retail whales, not meme coin flippers, actual institutional wallets. Addresses linked to custodians, family offices, and even sovereign wealth trackers began showing steady inflows at levels that made previous cycles look like child's play. Meanwhile, something else was happening in the shadows of the XRP ledger. Developer activity exploded. New sidechains, AMMs, and NFT standards went live, while most holders were still staring at price charts. Transaction volume on the ledger quietly surpassed Ethereum in certain weeks, yet the media barely mentioned it. The network was preparing for scale most people still don't understand. Then came the macro tailwinds almost no one connects to XRP. Global debt is at record highs. Central banks are quietly diversifying away from the dollar. BRICS nations are pushing for alternative payment systems. Inflation is eating away at traditional savings. And every single one of these forces creates the exact problem XRP was engineered to solve: instant, low-cost, borderless value transfer. The hidden buildup isn't just price action, it's structural. Ripple's on-demand liquidity has already processed tens of billions in real-world volume across multiple continents. Banks in Japan, Brazil, and the Middle East are live. What started as experiments is now daily operational reality. Each successful transfer burns a tiny amount of XRP, and with usage scaling, that burn mechanism is no longer theoretical. Supply is tightening in slow motion while demand prepares to go vertical. And here's the part that should send a shiver down your spine. While you were doom-scrolling Twitter arguments about XRP is dead, the very people who control global capital were positioning for the opposite outcome. They don't tweet. They don't make YouTube videos. They simply buy, hold, and wait for the catalyst that makes the math undeniable. That catalyst is now closer than ever. The legal clarity unlocked the doors. The real-world adoption is walking through them. The macro environment is lighting the fuse. Yet the price remains strangely contained. Why? Because the final phase of any major move always looks the calmest right before it explodes. The accumulation is almost complete. The narrative is still negative enough to keep weak hands from buying. The perfect setup for the dam to break. And when that dam breaks, it won't be a 2x or 3x retail pump. It will be the kind of move that reprices XRP into an entirely new league. The same league where $901 stops sounding impossible and starts sounding inevitable. But before we get there, we have to examine exactly how that price target was even calculated. What specific numbers, models, and real-world adoption curves are the $901 believers using? And why are some of the most respected analysts in the space now saying the upside could actually be higher? That's where the math gets dangerous. What if the $901 price target isn't wild speculation, but the logical endpoint of forces already in motion? A small circle of on-chain analysts, former Ripple executives, and macroeconomists have run the numbers through models most retail investors never see. Their conclusion is the same. Under the right conditions, XRP doesn't just go to double digits. It enters triple-digit territory, and $901 sits right in the crosshairs. Start with market cap reality. Today, XRP's fully diluted valuation hovers in the tens of billions. Compare that to the global cross-border payments market, which clears over $150 trillion every single year. Even if XRP captures just 1% of that volume as the preferred settlement rail, the required market cap jumps into the trillions. At a circulating supply that tightens with every burn, the per-token price climbs into the hundreds. Suddenly, $901 isn't fantasy. It's basic arithmetic. But the model goes deeper than simple market share. Factor in velocity of money on the XRP ledger. Each transaction burns a fraction of a drop. As adoption scales to thousands of transactions per second across banks, remittance firms, and central bank digital currency bridges, the burn rate turns exponential. Historical data from previous cycles already shows how supply destruction can multiply price impact by orders of magnitude. Add real-world usage curves that are now accelerating, and the supply shock becomes the silent multiplier behind every bullish forecast. Here's where the numbers turn aggressive. Some analysts layer in the escrow release schedule and institutional lockups. Billions of XRP still sit in programmed releases, but many are now moving into long-term custodial wallets instead of open market dumps. That changes the effective float dramatically. Combine it with growing utility demand and you get a compression effect most price models completely ignore. The result? Price targets that look insane until you run the exact same math Bitcoin bulls used back in 2017. Critics will laugh at this point. They point to past hype cycles, failed predictions, and the fact that XRP has underperformed for years. Fair points. Some respected voices argue that even with adoption, competition from stablecoins, CBDCs, and newer blockchains will cap XRP's upside. They call $901 delusional, a classic case of bag holder cope, and they're not entirely wrong to be skeptical. Crypto history is littered with broken promises and broken portfolios. Yet the counter-argument carries weight too. XRP already solved the regulatory puzzle that still haunts every other major player. It has first-mover advantage in the exact use case governments and banks care about most: compliance-friendly, instant settlement. While critics focus on yesterday's price action, the believers are tracking tomorrow's transaction logs. The divergence between narrative and on-chain reality has never been wider, and that gap is exactly what creates asymmetric upside. Zoom out further. Global financial stress is rising. Debt ceilings, currency wars, and settlement delays are costing institutions billions in friction every month. XRP's original design was built to eliminate that friction. When even one major central bank or payment corridor flips the switch to live production, the velocity spike could be instantaneous. We've seen smaller versions of this during past pilot announcements. Scale that effect across continents and the price trajectory changes overnight. Still, the $901 believers aren't betting on hope alone. They're watching specific triggers: full RippleSec resolution, major bank integrations going public, XRP ETF approvals, and the moment when on-ledger volume consistently outpaces every other chain. Each trigger has its own probability. Stack them together, and the compound probability of a massive re-rating climbs fast. The models don't say it will happen. They say the conditions for it to happen are aligning faster than at any point in XRP's history. Here's the part most $901 forecasts quietly admit. The move won't be linear. It will come in violent waves, with massive drawdowns in between that test even the strongest hands. That's why timing and position sizing matter more than the final number. The people who treat $901 as a guaranteed destination are just as dangerous as the ones who call it impossible. The truth lives somewhere in the tension between both extremes, but one event stands above all others. A single catalyst that could either confirm the entire $901 thesis or send it back into the realm of myth. It's not another court ruling. It's not another tweet. It's something far more concrete, already being prepared in boardrooms right now. And when it lands, the game changes forever. Shall who wins and who gets wiped out? Here's the brutal truth most influencers won't tell you. Not every XRP holder will come out of this tsunami richer. In fact, the majority could actually end up worse off than they are today, even if the price explodes higher than anyone expects. The wave doesn't lift all boats equally. It separates the prepared from the emotional, the strategic from the hopeful. Look at the different types of holders right now. First, the veterans, those who bought in 2017 or earlier, survived the SEC lawsuit and never sold through the multi-year grind. These people own life-changing bags at rock-bottom averages. When the real move starts, they won't panic at 50% drawdowns because they've already lived through worse. Their discipline turns into massive asymmetric wins. They understand that volatility is the entrance fee, not the exit sign. Then come the mid-cycle buyers, the ones who entered between 2021 and 2024, averaging around $0.50 to $1.20. They felt the pain of watching Bitcoin run without them, but stayed loyal. For them, a 50x or 100x move would still be generational wealth, yet many in this group are quietly accumulating more on every dip, copying the smart money pattern instead of chasing green candles. Now the dangerous group. The recent FOMO buyers, people who jumped in during the last small pumps, often with high averages and zero understanding of the actual utility. They're emotionally attached to quick riches. When the first real correction hits during the tsunami, many will sell at a loss, calling the entire project a scam on the way out. Their exit liquidity will fuel the next leg up for those who stay calm. Smart money knows this pattern intimately. Family offices and institutions aren't buying XRP for a quick flip. They're spreading large positions across multiple wallets, using OTC deals, and locking portions in long-term custody. They're also hedging with options and structured products most retail traders don't even know exist. While YouTubers scream to the moon, these players are quietly building positions that survive 70% crashes and still deliver 200x returns on the full cycle. The difference isn't information, it's emotional control and capital structure. Common mistakes are already time, chasing every minor pump instead of scaling in during quiet periods, putting rent money into one single altcoin because an influencer said, "This is it," ignoring tax implications and selling at the worst possible moment, believing that simply holding is enough without ever learning how the XRP ledger actually works or what real adoption looks like. These errors feel small today. In the middle of a parabolic move, they become financially fatal. Watch what the experienced players are doing instead. They're diversifying exit strategies, not all at once, but in planned tranches at specific price levels and milestones. They're building parallel positions in correlated assets that move with XRP. Most importantly, they're treating this as a multi-year business decision, not a casino bet. That mindset alone puts them in the top 5% of all holders. Yet even among the smart money, there's disagreement. Some are preparing for a slow grind higher with occasional violent spikes. Others believe the move will be so fast and so violent that you either catch the first wave or miss the entire thing. Both camps are positioning differently. In itself creates opportunity for those